Hello and welcome into the KE Report. I'm your host, Chad Markwitz, and we're getting an update today from Erik Wetterling, also known as the Hedgeless Horseman. And we'll put a link to the Hedgeless Horseman website down below so you can follow along with Erik's work. But Erik, it's great to have you on the show as always. We talk once a week about some of the opportunities we're seeing in the mining sector or just reflecting on the trends that we're seeing. We were talking a lot about M&A, so we decided just to do an episode talking about some of the transactions we've seen really through the course of this year. Obviously, the most recent one, and the one on everybody's mind this week, has been that Osisko Mining, traded on the TSX under the ticker OSK, is being acquired for a 55% premium by Gold Fields Limited, traded on the NYSE under GFI. And Gold Fields is a major. They often do 50-50 strategic partnerships or joint ventures with companies, but in this case, they're just grabbing the whole Osisko Mining company for the very nice deposit that they've drilled out and all the exploration upside. I guess let's kick it off with that one, Erik. What's your takeaways from this high-profile deal in the sector?
Yeah, I mean, it was a bit funny. It's like I was watching some interview with John, of the CEO of Osisko Mining, a week or so ago, and I just heard a segment where he said that, well, we almost have our entire market cap in cash, deferred tax losses or something, and equities and free funded or somewhere along those lines. Basically, the idea was that it's like you almost get the actual windfall project and all the land package for free. So I immediately bought some for a family member's portfolio. And it's like, I mean, for Gold Fields, they're getting, yes, they have I think it's a PFS out with 4 million ounces or something. I think all categories, it's like 7.4 million ounces. But they also get a land package that could keep them busy for 100 years. I mean, it's like you have almost two projects to the scale of the, Abitibi region, basically. So it's like, I mean, to me, this looks like a pretty good deal for Gold Fields. And Osisko, I mean, they can at least, cash out and end with a pretty high note in a bear market. I know some people I've seen some people say, why should you even be excited about getting bought out at close to what the price was at the highs 2-3 years ago? But still, I mean, that's a win in a market like this. It's certainly outperforming the index, and obviously you can reinvest that money in some other juniors that haven't moved up yet. So I mean, I think it makes total sense. Again, I thought Osisko was going to do that they were actually going to keep their 50% stake and, have this become an empire of sorts. But obviously Gold Fields wants to keep this empire for themselves. And we obviously see more evidence that Canada is the place to be for a lot of the majors. And I think Barrick recently, Bristow made some comments about that as well. But he pointed out that, hey, we'd like to buy something in Canada. But then when you think about it, it's like, how many good deposits are there in Canada? Big deposits. So I think this just shows that, I mean, the list of actually, let's say, tier one projects, I mean, it's as short as ever, basically. So that's why I'm also more and more kind of looking at, more advanced developers and stuff, because that's, I think, has the highest risk reward right now, because gold is, again, at 2,500, and you can buy the few, let's say, multi-million ounce projects that are out there in North America quite cheaply right now.
Well, Erik, I think you raised two interesting points there. One, that when there's a big merger like this, however people feel about it, it's almost always a good thing for the industry. And seeing a 55% premium is definitely a good thing, because it shows you what the potential is for the ounces in the ground to get re-rated higher in some of these takeover transactions and what they really should be rated at. So where the market has things priced, there is a mismatch between where a major is willing to pay for it, where they still think they're getting a good deal on the assets, but also where things are trading currently. So there is still a big discount in these multi-million ounce development projects. You mentioned that there's not a ton in Canada, but there are two other mergers, I guess we could call them, in the M&A space that happened really over the end of last year, beginning of this year, that we could bring up as examples. One is that Treasury Metals, which has a couple million ounces of gold, merged with Blackwolf Copper to become NexGold. And then there was also Moneta Gold and Nighthawk tying the knot and becoming STLR. And so with both the STLR Gold and with the NexGold, you've got two development projects coming together, Treasury and Blackwolf Gold and Copper and Moneta and Nighthawk coming together to form these new entities that are now bigger, they're massed up. They should have more of a target on their back from a larger producer looking at developing either both projects in tandem or seeing that there's a pipeline of projects. How do you look at things like that? Mergers where two development companies mass up to become a much larger company.
I mean, I really like it. And we can obviously see, there's reports out there showing, what you get for an ounce in the ground if you're a single asset developer, if you're a producer, if you have a PFS, whatever. And obviously, they tend to get higher valuation the more projects they have, the more diversified they are. And I would also include Integra Resources, for example. I mean, I looked at Integra, what the market cap was in 2020, late 2020, when they only had the DeLamar project, or that was the flagship project. They have had more projects than that, but they had a market cap of 217 million. Now, assuming they have the deal go through with Florida Canyon, they would be a low margin producer, but with about 10 million ounces all of a sudden, and the market cap would be around 200 million. So you have three companies that merge and will have the same market cap that Integra alone had 4 years ago, which I think is quite interesting, especially given that the fact that they have three projects should up the value of all the projects, because people are going to see that, hey, these can actually become a multi-million ounce producer. And NexGold, I would say, is interesting because, if you look at their presentation right now, it says, to become the next mid-tier gold miner, basically. And you have Frank Gustra, which he came in from the Blackwolf copper and gold shareholding. And I just like to see empire builders right now. I mean, if you have a few cheap companies and it's like, okay, we're not getting anything for it. And, that's just how the sector is right now. But it's like, if you bolt some of these together, it's like, first of all, you're hoarding up more of the potential projects that are, mid-tier or a small major, let's say, would want to buy in the future. Because again, with the permitting, with the lack of discoveries and all that, so it's like, it's a very finite developed resource projects in North America, especially Canada right now. So I just like this empire building thing. And with STLR Gold, I mean, now they have 8 million ounces of combined resources. It's like, whatever's going to happen with some of these companies, it's like, they have more and more beta, basically, and they're grabbing more and more of the few projects that are out there. So, the gold miners, for example, they obviously want to keep printing money because they are printing money right now. So they have no other choice than to buy gold projects to keep them in the gold business. And retail is out there like, these projects are never going to be worth anything. Nobody's going to want to mine this. Well, the majors, obviously, as we can see, they have a totally different opinion on that. And again, you can't just magically make a gold project appear. And I would say that if we don't find these tier one projects, really, I mean, we have a hard time finding them right now. What does that mean? I mean, who knows? Maybe in the future, the best projects that are for sale and not in the hands of the majors might be tier two projects. So, I mean, if you can't even find any more tier one projects, what happens with the tier two projects? I mean, I just think that there's a lot of, given how bad this sector is when it comes to permitting, access to capital and all of that, it just means the potential pipeline for the large companies is just getting smaller and smaller. So, I mean, when I see companies trying to hoard the ones that are not tier one, but, still out there and somewhat advanced, I mean, I like it it's like they're, an oligopoly, I was going to say, or whatever the term is.
Yeah, an oligopoly where they're basically owning the whole supply chain of everything. And it's interesting that we talked about this, I think last year, the year before, that eventually there'd be a point in the sector where we start seeing more M&A, and we either need to see companies combine up, like we just talked about with a couple of those, like with Moneta and Nighthawk forming STLR, or Treasury and Blackwolf forming NexGold, or you could argue with Integra that Integra and Millennial Precious Metals originally brought together Wildcat Mountain View from Millennial and merged it with DeLamar, and they got up to 6 to 7 million ounces, but now bringing in Florida Canyon, now they got 10 million ounces. So you're seeing these companies mass up, but then you're also seeing things like Osisko being acquired by Goldfields, or like when Sabina was grabbed by B2 Gold. There's not a lot of these multi-million ounce deposits that actually could become a mine And the more that gets scooped up, it's kind of like if we were going to the prom, all the good girls are getting invited to the prom, and there's not many left to ask to the dance. And if some of these majors don't get going, they're not going to have the date to the dance that they were hoping for. So I hope that it encourages more of a wave of M&A where people say, okay, well, who's next? What other deposits are out there that could be acquired? I mean, what do you think about that? Just the scarcity factor of larger assets, and that some of these larger companies that have been waiting and, kind of biding their time may have to start really getting active, or we're going to start seeing bidding wars again, or we're going to start seeing, and we've already seen a couple, but we're going to start seeing all of the good assets scooped up where there really are only tier 2 and tier 3 assets left.
Yeah, absolutely. I mean, I just looked at the reaction the day after in some of the more advanced developers, the multi-million ounce developers. I mean, most of them went up like 10% or something. And I don't think that's just, I think that was on the back of Osisko Mining. I think it showed the threat of, whoa, you have a bunch of cheap advanced assets out there. And so far, nothing has happened. So nobody has been, or the shorts, let's say, or whatever, who doesn't buy them. Anybody negative has not yet been punished, let's say, because, okay, I-80, for example, I think that ran up 12% or something. So you have all these where it's like a lot of people agree. It's like, yes, these are all cheap. And we can look at what gold is priced at. So on paper, many of these developers are worth a heck of a lot more than what they're trading for. But, there hasn't been any, let's say, events really that punishes the market for being so wrong in terms of what the value actually is, because they've been priced so low and they've gone even lower. So it's like, it looks like Osisko Mining kind of, made the market remember that's like, right. I mean, you can ignore the fact that the value is up there, price is down here, and as long as nobody, sees the value or has any money, let's say, they can keep sliding until you see something like this. Oh, Osisko, I don't know how many shorts they had, a few million, I think. Well, they got taken to the woodshed, basically. So I think that was kind of a shot across the bow, let's say, that it reminded people that you don't know when, all of a sudden, the value that is there, and is typically, I would say, especially for the higher quality stuff out there, is much higher than the current price. And with Gold Fields doing this, I mean, they punished everybody that, didn't agree with it, especially the shorts who were betting on even lower prices, even a bigger price to value gap. So, yeah, as always, I have no idea what's going to get the sentiment to change, create that first build momentum, let's say, to the upside for, in terms of price. That gets people excited and start to believe that you can actually make money on gold juniors or gold miners. I don't know. It might be this. It might be, a gold going up $100 in a day. I don't know what's going to trigger it. I just know that someday there's going to be something that triggers some kind of uptrend, and then it's, takes care of itself, basically. So I just like the idea of, these empire builders, basically, they're hoarding the pipeline. And the more that these big companies buy up, like you said, I mean, it's just the potential pipeline just gets smaller and smaller and smaller, because we're not hearing about these huge multi-million ounce discovery every day. No, there's not too many around. And every gold company is going to run out of war one day. So, and again, given what the price is right now for gold, they would make a lot of money on these projects as well. But they've been shy, as Frank Guser likes to say. But who knows? Maybe that they're not going to be shy forever. So if you front around that and actually started to hoard the finite resource, which is the future pipeline of projects, I think, you could get pretty rewarded sooner or later.
Yeah, and I think you made a good point that it was kind of like a shot across the bow in the sector, where a lot of other projects in sympathy with the takeover news of Osisko by Goldfield shot up that day. Like you're saying, like Bonterra was next door to Osisko Mining. They were up 43% that day. Skeena Resources was up like 25% because everybody knows Skeena has a advanced project. They've also just brought in their capital stack. So it was up double digits with no news, just because people said, wow, what would Skeena be worth? I think even Snowline Gold shot up double digits as well, because people thought, what would those 7 million ounces be worth if a major made a move on it? And there was other stocks I just can't remember off the top of my head here, but there was a lot of stocks moving up double digits that have optionality to not just rising metals prices, but optionality to a takeover bid like that. So I think a lot of people started rejiggering their spreadsheets and looking at, wow, what would these other companies be worth in that kind of a premium situation? I do want to ask you one last follow-up on some of the ones we talked about here, though, and that's the Integra Florida Canyon one. That one's unique in that they started off as a development company with one asset in Idaho with Delamar. Then they added in the Millennial Precious Metals assets with Wildcat and Mountain View. And there are a lot of it. There's probably another dozen exploration targets between all those other land package that they have from both companies. But then they're acquiring Florida Canyon from basically Argonaut. It was spun out into Florida Canyon Gold, but that's a spin out from Argonaut when Magino, another key asset in Canada, is being taken over by Alamos Gold. So you've now seen them move into the production category. What do you think of this move to basically fund the rest of their exploration and development work at all their other projects using a higher cost mine, but a mine that's still going to be profitable at today's prices to basically fund the operations instead of going back to the market and continuing to raise capital every year? What do you think of that strategy that Integra is using?
I think it's absolutely brilliant, basically. Obviously, it's a high-cost producer, but it also shows up in the acquisition price. So, I mean, if they can have a few years where they don't have to dilute and can just, expand in Nevada North. But if you listen to the presentation that they're doing, the main thing is that they get to de-risk two projects that are much larger at the same time. So, I mean, sure, if they diluted like hell and bought an actually really good mine, then, they wouldn't be trading at a combined market cap of 200 million. So it's like we can just guess what the actual tangible value of Integra is going to be in, let's say, 3 years when they can use that non-dilutive financing way to actually prove up there's more ounces in Nevada North, for example, de-risk Delamar. And again, who knows? I mean, from 200 million market cap today, let's say 3 years from now, maybe both are fully permitted. Maybe they've shown that there's 1 million more ounces in Nevada North. Maybe they've found some discoveries like the feeders up at Nevada North or whatever. It's like, I just think it's probably the perfect kind of project to actually pick, especially if your development projects are actually the flagship ones, because you don't take too much dilution and you fund both of these projects. So it's like when you think about it, I don't know exactly what they paid for Florida Canyon. It's like, well, that cash flow, imagine theoretically how much value that can unlock for both of their their 3 flagship projects. And then you have the benefit of it not costing any more dilution, let's say. And obviously you will typically get a higher dollar per ounce value if you're a producer and all of that. It's going to be a bigger company. Maybe some institutions can get into it, and who knows, maybe, gold goes up and what have you. So it's like, I think it's a brilliant move personally, even though, again, at face value, it's not like Florida Canyon is this great company making asset, but it's like it might be the perfect kind of asset for Integra Resources right now. That's how I see it. I mean, we obviously don't know what's going to happen, but yeah, I can see a future where it's like beyond obvious that the value of all the projects is much higher than 200 million market cap. So I just think it's probably one of the better beta, but at the same time alpha plays out there, and at face value at trading at deep discount to MPV.
Yeah, and I think they ended up paying like 95 million Canadian for it if you look at the deal from Integra to Florida Canyon, but I think the NPV of the project was like 128 million. So, there's already a spread there of over 30 some million that they're picking up with this deal. And that's assuming that there's only a 7-year mine life on it. When we talked to Jason from Integra on the show a couple weeks back, he thinks that they could extend that another couple of years with exploration work, which would mean more value. But it also just means the key thing is that they can use it as a source of capital to fund all of the de-risking and exploration work with their other projects without being a serial diluter. So I think that changes the game. It's an interesting model, and it'll be interesting to see how things develop there with Integra. But it's going to be interesting to see how these companies that have merged into larger entities do. Do they attract a major? Do they get big enough where they can get a better cost of capital to build one of their projects? And then obviously the big news with Osisko and Gold Fields is basically a warning shot to all the other majors and larger mid-tiers to get on the stick and start acquiring these projects, or there aren't going to be any big projects left in a safe jurisdiction that they can develop. So we'll keep following along with all the M&A action, but this was just fun to look at all these deals. And there's a lot of other deals we didn't even get into in this one that we could have talked about, but this is just a snapshot of what's going on in the space. That's the right kind of action that you want to see as a bull market really gets going, because then it feeds upon itself. And I'm sure that Erik will be covering a lot of different things on his channel. So definitely click on the link below this interview and follow along with all the work and all the companies he's talking to and some of his rant videos where he goes in and really looks at the sector as a value investor. And that's over at thehedgelesshorseman.com. So we'll put a link to that down below. Erik, always looking forward to our next conversation.
Great talk. Thanks, Chad. Oh, and consider me biased if I own shares of some of these companies I mentioned.